Talk about something like a Colgate Palmolive, which is in focus, and this is in the back in the spotlight as brokerages reassess their outlook following a weaker than expected first quarter. In fact, the stock is seeing some bit of pressure today as well. It's down about 4%. Now, HSBC has trimmed its target to 2,600 while maintaining a hold rating, and JPMorgan remains overweight but lowers its target to 2,625, expecting a back-ended recovery in the second half of this financial year. Mahima joins us with a more detailed outlook on the same.
Right. So, as you rightly mentioned, brokerages had gotten bullish in Q4 because Q4 performance for Colgate was outstanding, and because of that, quite a few brokerages did upgrade the counter and also raise the target price. But Q1 has been disappointing, and this is because volumes have not picked up and urban demand remains under pressure, and that is why we are now seeing EPS cuts as well as ratings downgrade and target prices being lowered for Colgate. I'll start with HSBC first. They've maintained a hold but cut the target price to 2,600 from 2,700 earlier. What they're saying is that moderation is more than what was anticipated, and that drives the overall target price cut. Colgate expects a gradual recovery in H2 FY26 is what the management has said, and they expect improvement, but structural growth potential now remains low according to HSBC. JPMorgan on the other hand has maintained overweight, but again here they've cut target price to 2,625 from 2,750 earlier. What they're saying is that overall the H1 is expected to be a tough first half of FY26. They expect back-end recovery in second half. Volume growth pace should improve again in second half of FY26, and EBITDA margins to hold out at the 32 to 33% mark. They're reducing FY26 to 27 estimates for revenue overall by 6% and this is mainly due to lower revenue that this particular quarter has shown. So this is the overall view as to why brokerages are turning bearish on the counter.
Okay, thanks for that, Mahima. But let me go across to our guest for today to get a more detailed outlook on this as well. So we already have Gaurang with us, but let me also welcome in Gaurav Sharma, Associate VP and Head of Research of Global Capital as well. Gaurav, let me come to you on this one. What is your view for Colgate?
Hi, good afternoon. Colgate is underperforming from quite some time now. It is a couple of weeks that the stock is hitting lower lows. All recent attempts to trade at higher levels and reverse the ongoing negative bias have went into vain. Still, the stock looks weaker after it posting its quarterly numbers. A good 4% cut is witnessed in today's trade, and I see it heading further lower towards 2080 odd levels in the near term.
Okay, so that's the view that we are seeing for Colgate Palmolive. So stock under pressure today as well.